what happened when Bear Stearns went under and then Lehman. The tide went out. We saw it was wearing clothes. To me, that's the problem right now. It's great. The tide's nice and high. It's great. But and you mentioned commercial real estate. I just look at things like even residential, everything's great. And we all see how our home builders are doing well lately. But if you thing that really struck me, if you look at new homes, new U.S. homes owned under construction, it's the highest ever in this country, and it's bumps up recently. You go back to 1970 on this database. It's never been higher, and then sales are collapsing. Yield or interest rates are going up. This is a complete recipe for a severe recession. It's just the way it always works, and that's residential.
Bloomberg's chief commodity strategist, Mike McGlone, recently shared his analysis of Bitcoin on Twitter, discussing both bullish and bearish factors influencing its growth. McGlone pointed out several positive drivers, such as the federal funds futures, the rising Nasdaq Composite Index, and the potential launch of Bitcoin ETFs, including BlackRock's. These factors helped Bitcoin regain the $30,000 level and are currently supporting its position. However, McGlone also highlighted bearish factors that could hinder Bitcoin's further rise towards the $40,000 price level. According to McGlone, potential challenges on the horizon for Bitcoin include a potential bear market in equities and cautious actions from central banks. Some crypto enthusiasts have criticized McGlone for his bearish stance, but he defended his perspective, emphasizing his reliance on facts rather than wishful thinking. He acknowledged the growth potential of Bitcoin but emphasized the need to assess how digital assets would withstand upcoming challenges in the days and weeks ahead. In the video, listeners can delve deeper into Mike McGlone's insights as he discusses how Bitcoin can survive economic downturns. He also shares his macro outlook on the debt spiral and global supply and demand dynamics.
The macro is just, if you saw what we all saw what he said last week. We saw what he did, the Bank of England, the Bank of Canada. I mean, this is a classic historical case of the rug pull and liquidity. Now, I have to admit, this weekend I went back and read about 100 years more of history of the crashes, and almost every single time it just reiterates my views. First of all, you pump things too much, and then you dump things too much. And then, so we have to be hoping, let's see, to be bullish Bitcoin here, obviously we have to hope for that ETF soon. Okay, maybe we'll get that. We have to hope for the stock market, bull market to continue. Maybe we'll get that, but I fully expect a recession soon. That's just not my view. Look at commodities are collapsing. Look at the inverted yield curve. It's doing it more today. You've seen the 10-year note yield ticking down this morning. And it's just the bottom line of liquidity. The Fed is still still raising rates, pulling that liquidity. So the macro is very poor, and I don't like to be bullish on hope. I like to be bullish on facts. So I think what's going to happen, my base case is we're going to tilt back into this normal bear market for a typical recession where stock market goes down. I'm sorry to say that's just the way it's usually happened in history. People just forget what happened in the last 10 years. They were been able to buy every dip when the Fed was zero. That's what Chairman Powell said last week. He said, we're not going to be there. We're raising rates, yet we know there's a lot of signs of slowing down. And there's no sign of that, of cutting rates. It's not just the Fed. It's virtually every central bank with the exception of one key one, China. China's a country that backed Russia. Well, the unlimited friendship, we all know that's failing. So I see this is, I'll end with this. To me, these are all the iterations of part of what I see as a significant economic reset. By the end of this year, it's going to come clear. And if Bitcoin can get out of this and beat an equity market on the way up, that would be great. If it can beat an equity market on the way down, that would be even better. I think that's where we're going in the long term. But right now, I see it as gold and long bonds are the most likely to do well. Now, just look at crude oil. It's back down again this morning, even after this issue with Russia over the weekend. And here's my outlook. I think that we're far from a low in the stock market. Just like I said in the commodity market a year ago, we are far from a low in the commodity market. A key question I ask people is, what stops this bear market? Now, this is a bear market in commodities. It's a bull market in the stock market. That's very rare. Unless we have a big deflation environment, the Fed's easy and everything's fine. They're not doing that. So to me, everything's going to tilt over that way. And then the question is, what stops it? So I think we're going to be at a point where in the near future, maybe it's 12 months, maybe it's 6 months, we're going to, the whole consensus that the worst is over and the stock market's going to get a good reality check that you too have traded in your lifetimes where, yes, there's periods where stock markets make highs and they don't make that a high again for another 15 years. NASDAQ 2000. This is and S&P 500, and then of course these things are. It's this. I've just gone back and keep testing my measure and my history of cycles. This cycle right now, the worst I've ever seen for a pump and liquidity and a dump, and also you put the narrative and where I'm sure James is all over as a hedge fund. guys, okay, what's my value, risk adjusted value to put on the positions here? Now this NASDAQ has completely told me we're going to break out. We've already done it, and it's different this time, and the stock market's going to keep going higher despite the Fed tightening. It's already done it, a lot of it. So what's my value versus maybe the pendulum just swings back towards the bear market? To me, that's what's going to start. Yes, I've been early, I've been late, I've been wrong, but there's a lot of indications it just has to drive people crazy and then eventually go that way.
During the recent FOMC meeting, officials indicated their expectation of multiple rate hikes by the Federal Reserve this year, contrary to the hopes of the crypto community who anticipated no rate hikes. Regarding the Bitcoin ETF filed by BlackRock, McGlone believes that even if it gets approved, the launch might not occur this year. However, a looming recession is anticipated in the coming months, which could potentially impact Bitcoin. Despite these factors, McGlone maintains a bullish stance on Bitcoin but remains cautious about its trajectory in the coming months, especially when considering the potential impact of a recession.
I've never seen a period where I've seen the Fed this adamant and seem this happy and this much battling the stock market. Every time the stock market goes up, the rate hike expectations go higher, where they seem satisfied if the stock market goes down. I've never seen that. So sure, maybe if you get a quick crash, they might save us again. But I look at Fed fund futures right now. We're at about 90% that they're going to be up at 5.3% by November, and then by next year they're going to drop 100 basis points. Now, what's going to take that for happen? Inflation going down? Yeah, who cares? If the stock market goes down, I look at it. I wrote about this recently. There's no reason for the Fed to do anything until the stock market makes them. That's the problem. Now, I just want to point out, we mentioned BITO. I'll just turn a little bit. If you want to see a good island bottom chart and something that's Bitcoin related, GBTC. Just spend a little more time here. Now, there's a nice chart. And I also look at that as if this ETF happens, we know that premium, that discount is still about 31%, pretty much is likely to go to zero, just a matter of time. So I look at risk reward. I can't make trade recommendations, but I can't trade either. I'm not allowed, which is probably keeps me neutral. Is that to me, there's a bottom formation to me. And that's also, it's got that, it can still ride out a 30% collapse. And still has that the premium that can help support that price.
About this. So that's what we're talking about right there. Yep.
Yeah. I look at some of the smart money might be going in. And okay, now we knew it was wide at 50. Now it's maybe, is it still wide at 30? But there's a good solid reason for it to narrow, and particularly if, BlackRock helps. So obviously it's a big lag. We know that, but we've had a historic event, and there's no measure in history near. I mean, you can go back to the, 1919 great plague, but it's never happened before. The key point is, what are central banks doing? I look at it simplistically. Let's not complicate this. Bank of England surprise hike more than Bank of Canada surprise hike. Federal Reserve hiked the most ever from zero ever.
And
you look at the log normal basis,
and we'll probably hike again.
So it's just simple. You're supposed to just say, okay, what's my 2-year note? 475. Thank you. See you in 2 years. I mean, that's what I look at it. Why complicate it?
Riot Blockchain, one of the world's largest Bitcoin mining companies, is set to significantly boost its hash rate capacity by purchasing 33,280 mining rigs from MicroBT. This investment of $162.9 million stands out among similar ventures by competing firms this year. The acquired machines, known as ASICs, are specifically designed for Bitcoin mining and feature high power efficiency and performance. However, delivery is scheduled for December 2023, with deployment planned for the first quarter of 2024. This purchase will raise Riot's hash rate capacity by 7.6 exahashes per second, reaching a total of 20.1 exahashes per second across their facilities. Moreover, Riot has an option to acquire an additional 66,560 miners under the same terms, which could further increase their hash rate capacity to 35.4 exahashes per second if executed. The move is considered bullish news for miners as the Bitcoin halving event draws closer. While preparations are underway to catch the wave of Bitcoin's upward movement, questions remain about how the cryptocurrency will be affected by the impending recession. Despite the uncertain economic outlook, Riot's expansion demonstrates continued confidence in Bitcoin mining's long-term prospects. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.